What is going on YouTube? It's Sanky. We are back with another one, and in this drop I'm coming at you with all things crypto. But before I get the show on the road, if you'd like to help out the channel by hitting that like button, and if you're new, join the movement by hitting that subscribe. So you guys already know Sunday's one of my most favorite days of the week because it allows me to get the whole family together and run you guys through the game plan for next week, and we're looking to kick it off on a successful note and start as we mean to go on. Now, my previous drop gave you guys the stocks we're looking at. In this drop, I'm coming at you with a couple of crypto plays. You guys know over here, we're looking to knock these plays out of the park on both sides. So as I say, I want to run you guys through some crypto plays that you guys know the strategy and how we're going to move them going forward to hit success. Now, if you're looking to kick off a fresh, brand new week with me, make these money moves, drop me down a comment below. And as always, guys, I've got a jam-packed one for you, so do make sure you stick this one all the way through for me. You know what time it is. Let's get ready for the first one. So the first one I've got for that's Ethereum Classic, and this is a sibling of the Ethereum play, so let's dive into this one. Now, as in the other day, this one had cleared $150. Since then, we've seen a significant pullback in that price. If we take a deeper look at this one, you can see they've been consolidating over the last couple of days, i.e. trading flat. Now, as long as we continue to see interest and momentum in Ethereum, then this one should have a spike in that price. I'm gonna put them on your radar. Now, what I want to say to you guys is, with these crypto plays from the jump, you guys got to know your exit strategy, at least if you're in it for the short term or the long term. Now, it doesn't really matter what camp you're in, just make sure you know which side you're on, because you don't want to be in one of these plays and for that price to turn on you because of the volatile nature of it, and you guys don't know what to do. So with me, I like Ethereum Classic as a short-term play. And this is because number of reasons. This is a spin-off of the Ethereum blockchain, and we know they've got a long way to go in terms of their use cases and applications for this one to be considered a stable long-term play. Also, we know this one's been hacked over the last couple of years as well. So again, it just shows the vulnerability of the play. And also, this one's seen waves and waves of retail buying, but not enough institutional buying for my liking. Now, if I'm going long-term in the play, I like to see heavy weighting on the institutions that have got that sophisticated understanding and the capital backing. But as I say, if we continue to see that momentum in the Ethereum blockchain, this one right here has got that home run potential. So I want to put this one on the family's radar. Let's move to the next one. So I want to shine the spotlight on this one. We've got Ethereum. Now, over the last couple of weeks, this one has been on what I call a sensational run, as you can see. But given the fact that the technology and the applications here are strong, this one is far from its final form, and that's coming from the experts. Now, it's said that this one can hit that $1 trillion in market cap value. They're currently half of that now. And indicators are shown this one can blast through the 4,000, get to the 5,000 in the short term. And if we're looking for a wider lens, it's 10,000. That's the target on this play. So over the long term, this one can generate great returns, but you guys need to know how you handle these types of crypto plays. Crypto can be volatile. Now, I know a lot of the family are new investors. You guys haven't seen a full crypto cycle. But same way, you guys saw how the stocks turned. You saw a cycle there. You saw the pullbacks. When you guys know that crypto can also pull back with even more velocity. So the way you handle that moving forward is you guys dollar cost average into these crypto plays. So you don't go all in on any one investment. A schedule works best, whether that's daily, weekly, or monthly. Now, ideally, you guys want to be grabbing these crypto plays on the week or bi-weekly dollar cost average schedule. So when you guys get paid, you guys have a portion of funds that call that dry powder that you guys deploy into the crypto plays. Like in Ethereum, that is a long-term asset to your portfolios. So as I say, the experts know that this one is far from over. All the applications, the UK use cases, the NFTs can come into play nicely over here and generate solid returns. This is one of these plays I say we can build and preserve wealth in over time if you guys are able to stick to that dollar cost average schedule, ride through the volatility. Let's move to the next one. So guys, outside those big dogs of Ethereum and Bitcoin lies crypto plays with longevity potential ahead of them. One of those I want to put on your radar, that's Cardano. Now today, this play broke through that previous resistance at that 170 mark. So over the next couple of trading sessions, over the next couple of weeks, this play could show momentum up to that $2 mark. Now I'm gonna read you guys, the goal of this one is a platform to implement all the best features of Litecoin, Bitcoin, and Ethereum into one cryptocurrency. So this play is doing it big, and as long as they're able to hit their milestones as it relates to their technology and their applications, this one should be able to deliver for the investors over time. So this is one I want to bring to your attention to help you guys diversify your crypto portfolio. Now, the same principles apply with the other two crypto plays. So you want to be dollar cost averaging, but also you want to ensure you know your exit strategy, whether you're a long-termer or you're a short-termer in the play. So those are the crypto plays I want to bring to attention, and for my new investors not yet into crypto, this should act as a good introduction into the game. And for my investors already into crypto, this should help you guys diversify further. Now I'm going to talk to you guys about portfolio concentration. Now you guys know on the stock side of things, I say don't let any one play take up more than 5% of your overall portfolio. This is because from time to time, things can happen with that individual play, and if they do, you don't want them having too much of a pull on your portfolio. So as a sweet spot, I say have around 20 stock plays in your portfolio. Now, if we flip over to the crypto side of things, you guys want to deal with a much smaller number of plays. Anything from 3 to 5 plays is all you need on the crypto side of things. So if you guys are just sticking to those strong crypto plays to go long in, that should set you guys up for success. So you don't want to have that scattergun approach when it comes to crypto plays. You guys want to keep it tailored and controlled. So if you're rock with the channel, you know what time is. Question comes from Scott Glover, says, great video. The analogy of being the CEO of your portfolio is gold. Currently fired 4 stocks from the portfolio, including CNET. My question is, when you look at a market cap and price to earnings ratio, is there a golden number you're looking at, or is it mainly charts like the fib charts you taught us and you decide on? So this is a great question I want to share with you guys, because what it did is it reminded me to ensure you guys all know that it's a very difficult task to value a crypto play. Even the specialists who have deep understanding of them find it a very difficult job to do. And remember, the price it's trading at is not its fair and true value. Even more of a reason that you guys ensure you are dollar cost averaging into these crypto plays over time, because when the cycle reverses and they exit the bull run, there's an opportunity to get these at a much cheaper price. The difficulty in valuing them causes that volatility. So to ensure you guys have dry powder on deck to deploy into these plays when the prices become much cheaper. So in terms of the question at hand, because you guys mainly have growth plays in your portfolios, you want to be focusing on the price of sales versus the price to earnings. This is because a lot of them make little to no net income, and that distorts the price to earnings number. Now, in terms of what number I shoot for, when I'm going long in a play, ideally I like to see price to sales less than 15 times. But the way you go about using it is, if you take your play in question, check its price to sales, take growth generation, price to sales clocks in at 13 times, compare that to another play in the same industry. So you can compare that to a Canopy Growth Corporation where price to sales clocks in at 20 times. So from that basis, it looks like growth generation is a cheaper play to pick up in the markets than a CGC. So you just apply that to different plays in different industries, and that'll help you guys determine if the play is undervalued, fairly valued, overvalued. But as always, it's good to see you guys thinking deeper into these plays, looking at the valuation, thinking about your exit strategy. It's showing you guys the family is leveling up as investors. Alright guys, so that wraps up for this one. If you'd like to help out the channel, do hit the like button, and if you're new, join the movement by hitting the subscribe. Also check out the link down below to the Patreon. Come join our winning team over the Discord. Now ahead of Monday morning's opening burn in the stock market, one last thing to say, let's go.